We're almost 2 hours into trading on Tuesday, June 1st. Hello, traders. Let's take a look at last week's pick. I haven't recorded a video in the last few days. Wednesday was the last day. Tesla was the pick. And you can see price action on Wednesday. Very, very nice. Stock continued to push higher, so it was a nice day trade. You can also see we've had some follow through the last 2 days as well. However, the market really hasn't done a lot. It's pushed up to the high. Let's take a look at what it's doing today. And you can see on the daily chart, it challenged the all-time high in the open this morning. There it is right there. Let's go into my pre-open market comments, which incidentally, if you'd like to get my pre-open market comments, you can click in the description area of this YouTube video and you can follow me on Twitter, and there you'll be able to get my pre-open market comments each day. Today I'd mentioned to traders, there's the chat room. You can see what time I posted my comments. These comments were posted about 30 minutes before the open. And you can see the very last paragraph here. Day traders should expect a holiday hangover and light choppy volume. Gaps higher have been faded, and I would not chase the opening rally. Wait for the bid to be tested. Once market support's been formed, buy stocks with relative strength and heavy volume that are breaking through horizontal resistance. It's exactly what we're going to be looking for. Look, what happened at the what happened to the market this morning? Gap up, reversal, just as I had expected. So these gains were all fluff. We had a little bit of beginning of the month fun buying, probably still going to help the market. We had a bullish 10P cross right in here about 30 minutes after the open, but you needed to be careful and make sure that that gap had been filled. You can see the low of the day. There's the close from Friday. Not quite filled in yet. Fairly decent heavy selling in here, although lackluster. There's really not a lot going on. If I were going to tell you, yes, big time heavy selling, we are going lower, you would see red candle after red candle like this without very many reprieves, but now we're getting into some mixed green and red candles, a couple of tails under body. You can see how there was a low here. That low was a marginal new low, so not very much difference between these two lows. That's a sign that support is forming. Long tails under body in here. I think that we're going to get a little bit more weakness. You'll have this 10P rollover here, and then I'll be watching for the next bullish cross. That should come on a higher low double bottom. Then we'll have a nice, decent little buying opportunity. But the underlying theme doesn't change. Do not chase. You do not have to chase this market. Watch for sector rotation. Tech stocks have had a bid recently. Now all of a sudden we're seeing some rotation back into basic materials. So those will be some of the stocks to watch. As I go down the list using the heavy buying search, PDD, BABA, JD, those are all Chinese stocks. Baidu has been on a list also, so they are gaining a little bit of traction this morning. Let's take a look at the FXI. If China is going to lead the global economic recovery, then we had better start seeing some strength in their market. And up until now, we really haven't seen that. So I'm very suspicious of any kind of economic recovery. Today, you can see it got through the 50-day moving average and the 200-day moving average. It broke through this downward sloping trend line. One day does not make a trend, so I would like to see some follow through. If we can get some follow through in Chinese stocks, that might bode well for a global economic rebound. But until then, I'm going to be fairly passive. So let's see if these Chinese stocks can hold. Most of them gapped higher on the open and they retraced. Let's take a look at Alibaba, and you can see open on the high, continuing to pull back, may even fill in more of that gap before it gets going. Out of the Chinese stocks, PDD does look to be the best. That is really nice, steady price action. So PDD is one that you'll want to watch for day trading. Also, you'll see that there are a number of banking stocks. There's MS, ALLY has been on the list. There's Morgan Stanley right there. So the financial sector is catching a little bit of a bid. But the majority of the rally is in basic material stocks. Rio, iron ore producer. We have CVX, energy producer. Oxy, energy producer. ExxonMobil, energy producer. ConocoPhillips, Marathon Oil. The energy sector is catching a real bid. And that's what you want to do on a day-to-day basis when the market's not providing a whole lot. There's a bullish explosion alert. What the heck? Let's take a look at it. It's a quiet day. This is post-holiday trading. I call this a holiday hangover. Nothing there for us to look at on that bullish explosion, by the way. So we've got the market coming in. Take a look at the daily chart. You can see there's going to be resistance at the all-time high. Tiny little candles here on light volume. That tells me that there is still resistance. I'm not surprised to see us back off at all. So we're in kind of a waiting period because we had ISM manufacturing today. Those numbers were very strong. A reading above 61, very, very strong. It was a little bit light based on the consensus estimates, but not materially. We have ISM services coming out Thursday. We have the ADP report coming out Thursday. We have the unemployment report coming out Friday. Now, last month, the unemployment report was a huge disappointment. They were looking for 1 million new jobs. I believe there were about 225,000 new jobs that were created, so a gigantic miss. I am expecting that that number is going to be revised much higher on Friday. That means that the number that was reported at the beginning of May, which was April unemployment, I believe that April number is going to be revised much higher. Why? Because we've seen initial jobless claims continuing to drop week after week after week. We had a super strong ADP report a month ago, and it showed robust growth. Employers are having a tough time finding help right now. ADP processes payrolls for medium and small size companies. They know how many checks they cut. There's no miscounting, there's no seasonal adjustments. ADP is the number to watch. So I think this Friday you're going to see a nice, strong unemployment report. We don't have to worry about Fed tightening. So good news is good news. So we have that as a possible catalyst for a breakout. But in general, the market seems very kind of mushy in here. Valuations are pretty stretched. Everybody's waiting to see how inflation plays out. I believe that the most important part of that Friday unemployment report is going to be the hourly wage component. Last month it showed a 0.7% increase. If we get a repeat and another 0.7% increase, that is going to put a lot of upward pressure on prices because that is one of the primary input costs for companies. So keep a close eye on that. And the market's just going to wait around and see what happens with all of this inflation. We won't know that for a couple of months. So I think that we are going to see resistance at the all-time high. By the same token, any market dip is instantly bought, so the bid remains strong. We'll put up the major moving averages, but the 50-day is really the only one that comes into play. If we did get a substantial market dip, I think that 100-day comes into play right at that horizontal breakout. So this is a major technical support level right around the SPY 398 level. So if things started to head south, I think this is where you find big time support, and obviously at the 50-day, given that that was challenged twice, and both times that was a buying opportunity. So brief little dips down on that 50-day. That is where you want to sell your out of money bullish put spreads. There you got another chance to do it. So you have to have those stocks ready because when those dips come, they don't last more than a day or two at most, and then boom, we're back off to the races again. So look for us to bide some time over the course of the next month or two. You get support challenged. That's where you sell out of the money bullish put spreads, and you can do some selective call buying. But as we get close to resistance, you have to get more passive. You have to be in cash. I think it's going to take a couple of months for all of this to play out. So we're focusing on day trading. Lots of good sector rotation intraday. So that's what I'm going to be looking for. And I'm going to try not to focus on the hot sectors. So I'm going to avoid Chinese stocks. I'm going to avoid the bank stocks. I'm going to avoid the oil stocks. I want to look for something different, something that's rallying and is perhaps strong relative to its group. And so I went through the heavy buying list and I came up with Dell. That is going to be my pick of the day. So you can see earnings after the close here on Thursday. The stock pulled back a little bit on Friday, tested that 50-day moving average, and then off of the low from Friday, it rallied all the way back. So let's put up the 5-minute chart to see exactly what Dell did. There's your early pullback. Stock spends the rest of the day grinding back. And let's take a look at what the S&P 500 did during that same time. You can see drift lower. The gray line is SPY. So the market continued to drift lower. What did the stock do? It held the gains and that rebound. What's it doing today with the market down, 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 down? It's above its high from Friday. In fact, it's above the close from Thursday. This stock wants to go higher. I like Dell for a day trade. I like Dell for a swing trade. It looks really good to me. I would favor selling an out of the money bullish put spread on it, keying off of that $95 support level, which is right around the 50-day moving average. Let's see if we can get any premium. We may have to go out a little bit in time because Dell does not typically carry a whole lot of time premium because it doesn't move much. 95, 92.50 would be my first choice. Only a 15-cent credit offered at 21. I need to get 50 cents on a trade like that, and I'm not going to get it in June. There's simply not enough time. So I'm going to go out to the July expiration. We're going to look at those same strike prices, and we're going to be looking at the 95, 92.50. And let's reset all this. There we go. So there you can see 33 cents bid offered at 66. 50 cents is right between the bid ask. Now you're going to have to wait about a month and a half for this spread to expire. But heck, you're way out of the money. You can see you're more than 2 standard deviations out of the money. And in the course of a month and a half, if this spread expires worthless, there are 2.5 points between the strike prices. I receive 50-cent credit. $2.50 minus 50 cents is $2. That's my maximum risk on the position. That's also my margin requirement on the position. So 50 cents divided by $2 is a 25% return in 6 weeks. That is a beautiful, awesome return. And I believe that this has a very high probability of success. Horizontal support. You can see you've got the 50-day moving average as well. And that was a prior breakout. So that resistance level now becomes support. I like that trade. Yes, you're going to have to wait a little while for it, but option implied volatilities are very low, especially with the market hovering near an all-time high. And here you have a stock that looks poised to break out to a new high with excellent strength after the number. So I like Dell. That's your pick of the day. Obviously, if you're looking to trade some strength just for day trade, commodity stocks are tough. Energy stocks are tough. Everything looks beautiful. Go, 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 go. And then you get a pullback. So know that you're trading energy stocks and that they tend to be very, very choppy. And SPG was another stock that kind of caught my attention. And you can see that it's been able to hold the bid quite well today. And if we go into the daily chart, you can see that it is breaking through resistance to a new high. It is a REIT, real estate investment trust. I like it. I think this is a really nice stock that you can also trade. It's not a big mover. Look to sell some out of the money bullish put spreads or day trade it from the long side. That's all I've got for you today. Look for a very quiet day. Again, a holiday hangover, and the action should start to pick up Wednesday, Thursday, Friday as we get some of those economic releases. Excuse me, it'll be Thursday, Friday. Tomorrow's already Wednesday, and there aren't any big economic releases. So I think Thursday and Friday are when things start to perk up a little bit because we've got some information. Thanks so much. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.